Hello, Theo traders. This is Doc Severson for the nightly report for Tuesday, April 12th. Pretty big move today as we went up about almost 22 points in the S&Ps and 163 on the Dow. So what does this really mean and what's driving it? Well, the big story today was crude oil going up, and we'll get to that one in just a second here. But what does this really mean in terms of the actual trend and whether or not we're going to be breaking higher or lower on the S&P? So to answer that question, what we have to do is kind of drill in on the daily chart to begin with. And this is about as nice of an example of a bull flag pattern. Now, I don't trade off of too many patterns, but this is almost a textbook consolidation pattern that's slightly descending to the downside, bouncing up and down and inside there, relatively declining volume during the flag. And so what we would want to see is this break out of here on a big green candle, which may happen if we have enough of this sandbagged earnings that have not been priced into the market. Remember, everybody's expecting this earnings cycle to be horrible, and so we're going to find out what actually happens to that. If it doesn't turn out to be horrible, then we are going to have another squeeze to the upside. Next target on here is going to be about 2100 on the full S&Ps here, at least on the ES. Now, before we get too excited about an upside breakout, keep in mind that this is still a lower high on the weekly chart. We actually have a monthly downtrend in place. So to cancel that, we're going to have to do some constructive work at some point. Regardless of whether we break higher or not, at some point, the weekly chart is going to have to undergo somewhat of a pullback. We saw this back in November and December, exactly like this. That led to a lower high and much lower prices at the time. So eventually we'll get a pullback. What happens after that pullback, whether or not it drives higher to form a higher high, or whether it actually just sort of fades lower to create that lower high, and that's usually where we get too many people on the wrong side of the boat pulling on the wrong oar, and that's where they get tossed overboard. So I could see a little bit more upside here until we get to this very important 2100 area, but I think it's going to be really tough going, really slow sledding at that point until we do undergo somewhat of a pullback. Now, it's going to be a scary pullback. Everybody's going to say, oh no, there we go, it's a lower high. Right? And this is how markets move, because people get scared. Fear comes out, and that drives the short squeeze again when too many people get too bearish at the wrong time. So just the pullback by itself is going to be very, very normal, even though it's going to feel odd because we've been doing nothing but going higher over the last 2 months. Now, I keep waiting for tax selling to come along. I keep waiting for people to ditch their equities so that they can pay their tax bill this Friday, at least in the U.S., but so far it hasn't happened. We haven't seen anything like that at all. Perhaps the tax bill wasn't that big after kind of a very flat 2015. So net here on the S&P, I expect a very, very important inflection point here fairly soon, which is going to affect everything in the market, right? Everything in the market is going to bend and react to this inflection point, whether or not we end up driving higher or whether that ends up being a lower high and driving lower. Okay, stay tuned on that one. Now, let's go back to a couple of assets. First of all, let's go to oil, which is what drove most of the action today. So a lot of people getting very excited about oil. Let's take a look at that. All right, here's the continuous contract of the crude, and you can see how powerful this downtrend has been on the monthly chart. This is a very significant downtrend, but of course people don't watch the monthly trends. What's the fun in that? They look at the daily chart, and we've seen a rally from 26 up to about 42 so far here. So I got people saying to me, Doc, that's a 60% rally. Crude oil is in a bull market. Well, not quite, because the larger time frames are still dominating the conversation here. And at some point, I would expect to see crude oil put in a lower high, maybe ultimately a higher low after that. But at some point, this is going to roll over as a lower high. There's still just too much gravity working on this monthly chart, right? So if we do get a reversal, if we extend this rally a little higher, it's because what we're going to have to see is this reversal occur on the smallest time frames first. So in this case, I'm just only going to go down to the daily chart. lower highs, lower lows, lower highs, lower lows, lower low into mid-February, okay? And this is where the magic started to happen. We bounced up there, put in a higher low, higher high, so we now have a change in polarity at the daily chart. For this to happen at the weekly chart, all this is just one big swing on the weekly chart. At some point here, the same thing has to happen. We have to go through some type of a higher low, higher high combination on the weekly chart to get that to reverse as well. And then, of course, in a monthly chart, the monthly chart has to do the same thing. So there's an awful lot of work before I'm going to get too excited about getting a tradable bottom in crude oil at this point and maybe trading something like the USO. Is it possible that I might lose a few points of edge during this process by being a bit more patient and waiting for the trend to reverse? Yes, I might not get the exact bottom, but all of these people that bought this bottom right now know exactly what I'm talking about, right? This is what happens when you try to catch the falling knife. And this is what I usually try to avoid. So this is what was driving markets today. We've had a nice move today in crude oil. This has to take out this high at about 42.5 to be able to sustain the uptrend and drive this weekly chart higher. I'll finish out today's video by looking at China. Now, when was the last time you heard anything about China? It's been a while, right? It's off everybody's radar right now because it was exciting back in January when the market was falling apart, and China was really helped driving that, right? So I'm just looking at the FXI. I'm not looking at the Shanghai index. So this is going to be somewhat distorted, but still fairly strong move that we had here as we had, into the summer and then, of course, into the early part of the year is what was sort of the camel that broke the straw that broke the camel's back in the market in January. So what has to happen here? Well, the same thing is happening here as what we just went over in crude oil. So nice little rally off the bottom, but, hasn't really done anything yet. So we have to go through the same kind of process with China and the FXI before we're going to see a tradable bottom over here that's worth going after. We're going to have to see some type of a higher low here and a higher high, which reverses, which is only going to just pull this monthly chart up. Then ultimately the monthly chart's going to have to go through another scary drop in price to form that higher low, and the same thing will have to happen. So we're months away probably from a tradable bottom on anything to do with China, or at least in this case the FXI. So again, I'm not trying to catch the falling knife here with China until it shows to me that it started to move to an uptrend with higher highs and higher lows. Will I miss out on the absolute bottom? Absolutely I will. But that's okay. We're just trading based on probabilities, and right now I want to have the probabilities in my favor before I start taking those trend trades. Right now, we should be selling the rallies and looking for long gamma to the downside. Okay, that's it for today's report. Thanks for listening, guys, and we'll see you later on this week. Take care.